Hi, good morning traders. Welcome again to another edition of Market Analysis for today, May 8th of 2025. I'm Gio Betancourt, and this is a recording on about an hour and 40 minutes prior to the U.S. session open. Well, let's get to it. U.S. stocks looks set to rise today after President Trump said he was set to announce the first trade deal since he unveiled sweeping tariffs on countries across the world. The three blue chip indices ended yesterday in the green on news that U.S. and Chinese officials will meet to discuss trade and reports that Trump could relax curbs on artificial intelligence chips. The Fed also held interest rates as expected, although Chair Jerome Powell did signal that Trump's tariffs have made the macroeconomic outlook more uncertain. Stocks were headed for further gains after Trump said in a post on Truth Social that he will unveil a major trade deal with representatives of a big and highly respected country. He's set to give a press conference in the Oval Office around 10 a.m. Eastern Time. It's expected that President Trump is to announce the framework of a deal with the UK. So as far as we see here in front of us, the NASDAQ has created an outside range day, which basically is when the price action of an outside day determines the outside range of a previous day. So that's what we've seen here so far. Let me just wind up the chart a bit more, and basically the outside range from yesterday is this and this. Basically, this is the range from the previous day that engulfed. It's like an engulfing candle, and so far, obviously, we are looking at a momentum to the upside. Even though we did open gap down, it has obviously been closed, and the momentum to the upside is rising. So that's something that we want to be obviously keep in mind. After the FOMC met yesterday and leaving the rates unchanged, they did make an indirect reference to the risk of stagflation, which is high inflation, low growth. It's also the worst possible economic regime for equities. Every sector tends to underperform. With that being said, let's take a look at the what we could determine to be our levels of resistance. Let's use the tool trend-based 50 extension. Okay, we can basically come out and just measure the movement so far since yesterday's low, and we can come in and identify that the golden ratio at 0.618% is at 20,259. So let me just give it right here. That could be, which is basically our high of today. So that's where it came. It will come to. It has already done that. So does that mean that the market will retrace? Well, it is beginning to retrace. I'm just gonna use these two levels. Perhaps the market will retrace and just come back down, looking for some support. That could be yesterday's swing high, initial support level, right? But let's just use some. And today's swing low is basically 19,935, so 35 points away from the psychological value of 19,900. We could also come in and use the retracement tool to see how much of that movement are we going to retrace. So from yesterday's low, so it is said that the golden ratio, so we have already retraced towards that level just using the last previous candle movement. Can we come back to it? We already in the range, so perhaps today will be just another day of whipsaw. It is a pretty wide range anyhow, so let's keep that in mind. I'm gonna use some level. Yesterday's open of 19,807, which is also almost another level of psychological value. I'm just gonna leave it there. And then the 50-day moving average as a profitable level of support. Dow, the S&P 500. So the S&P 500 also open up, gap down, but yep, this one closed at 56.44, open at 56.42.90. Not much of a gap down really. I'm just gonna use that. And then as far as second support, 55.80, leaving the same levels of resistance as yesterday. So the targets anyhow, if you want to be bullish. Dow Jones Industrial fluctuated above our both levels of resistance that we have since yesterday. So I'm just gonna use that swing high from today, and then the upper Bollinger Band. I'm gonna bring up my first level of support to 4,100. 4,100. There it goes, and then 40.80, second level of support. Again, it is looking to be another green day for the indices after this news. Let's see if that would be so. Let's take a look at crude oil. Yesterday, it did swing high towards $60 and just retraced real quick. Profit taken probably was the scenario of it, and then just panicking selling. Now we have another basically rebound from that low, but let's look at, I'm gonna look at 57 to 50, and then the lower Bollinger Band for support, for the second support. Resistance, I'm gonna leave the same. I'm gonna bring down the second one. So let's see if we see it capture and move to the upside today, or will we stay in range? Nat Gas. Well, Nat Gas needs to be catching the momentum. So the 50 moving average, the market did fluctuate above it a bit. It retraced. So I'm just gonna leave that as is. The 50 moving average is right below that. So it'll act as a dynamic level of resistance. So 33.45 is the first level. And then I'm gonna use yesterday's open for a second level. So let's see if we actually make another leg up in Nat Gas. Gold. Well, gold. Gold yesterday, even though it opened gap up, it retraced. I wasn't really expecting it to do much. That's why I left that up, those levels of resistance so tight. Today, we are basically in a whipsaw, strong whipsaw. It did fluctuate to the upside, but it's trading lower now because this one did open at around, let's see, 33.65. This one opened at 33.65, and it had a high of 34.14, and it's retracing obviously below our level of support. So I'm going to use the 20-day moving average, which is the mean of the Bollinger Band, and then this swing high from last week. Yes, there you go. Those are our levels for today. Will gold continue to trend lower? I was looking at it, so now it's just retracing or recovering. Let's see. I'm gonna say that 3,400 might be the level of resistance that it'll hit if it does recover. Then we see silver, pretty much of a same fluctuation as gold. So I'm gonna use the lower Bollinger Band in this case. $33 round value, psychological, and then yesterday's, well, that double top really, that's a great place to find resistance. Sellers were there. Why wouldn't they be again there? Copper. So copper also just tanked yesterday. Strong sell-off. 445 and the lower Bollinger Band. The congruence of the 50 and the 20-day moving average, first level of resistance, and yesterday's swing high. Could we be seeing a recovery in the metals, at least in copper? Let's see. Bitcoin seems to be strong, 100,000 again. Kisses it, retraces. I'll leave that and then use the upper Bollinger Band as probable level of resistance. 96,000, first level of support right below the open, and the 20-day moving average of the mean for the second level. So let's see if Bitcoin would be able to close above 100,000 and perhaps even more. I think it moves in thousands. So the euro, it open gap down. It is a doji right now, so I'm gonna use the lower Bollinger Band and 112 as that strong level of support. 20-day moving average medium, and it's just too tight. But looking at the wicks, the coin size is almost 3 times, so that's when I'm gonna place my resistance. For some reason, the market fluctuated to that level and just came back down. For whatever reason you want to say that a wick is made, or that people say is made. Then we have the pound, which is more in the green than the euro. So let's choose that lower Bollinger Band and 134, same levels. And the dollar index seems to be, after Mr. Trump's announcement, seems to be catching a bid. It did have a fluctuation down as low as the almost a 20-day moving average, and it picked its head above 100. It's retraced. So let's see if that was it for it, and it will come back down again towards the 20-day moving average and some more, or will it stay there lingering? That's it for me today. Have a great trading day, and I'll see you tomorrow.